you very much. Thank you very much for joining. This is the Morning Market Review. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM. It's Thursday, the 2nd of February. Please take note of my email address, rshaw@fxcm.com. And just going to bring in the high risk investment warning. I'll keep this on screen for a few moments. Hi Howard, morning to you. Thank you very much. Okay, he's given me the 3 yeses. And let's bring in the market commentaries disclaimer. Hey Shadrach, nice to have you on the webinar. Thank you everyone for joining this morning. And here is our references, MarketScope 2 and TradingView.com. I want to start off by going to TradingView. Again, we're looking at our roll rate. I want to just give you an idea of where we're at in terms of the peaks and troughs. And I'll explain to you why I think this is such an important chart for us to keep on top of, especially as traders. So we'll put in the peak. All right. And let's put in the reference trough. And once we've got the references in, you can see here's the lower peak. Okay, so real rates now showing distinct signs of weakness, but really for it to form a downtrend, it must take out the previous trough. Okay, so we've only got 3 or 4 points, so I'll put in LT here, question mark. Okay, so we need the lower trough. Without the lower trough, we don't have the downtrend. And we had the Fed yesterday. The Fed initially the statement said that they still need to maintain the hiking environment, but to be quite honest with you, there was very little pushback from the Fed. Very little pushback. In fact, there was a comment from the Fed that really, to me, was quite surprising, where they effectively, well, it was in the press conference, effectively the Fed chair came out and he said, let me see if I can find it. He says, it would be, I beg your pardon, if we feel, listen to this very carefully, if we feel like we've gone too far and inflation is coming down faster than we expect, then we have tools that would work on that. That's effectively the pivot. So he basically admits to a pivot whilst they're trying to push back. And once that was out, you know, once that kind of genie was out, the markets really loosened up. And if we go down to the hour, you can see that here is here's the big movement down. Okay, there's the big movement down right after sort of the genie was let out the bottle. Right, here's the dollar following down. In effect, the market conditions loosened up, and I would suspect, mistakenly so, I think that the Fed would have wanted a little bit more pushback than was effectively delivered in the conference. And what we have here in the daily, I beg your pardon, in the middle chart is the US dollar, and then you can see the correlation coefficient. The correlation coefficient between the real rate and the US dollar is now a very strong 72%. So they are reconnecting, and I think the dollar's been front running the interest rate. The interest rates looks like it's going to make that lower trough. Now, something that I've forgotten, and I'm begging your pardon, we do have a live trade tomorrow, a non-farm payroll live trade. So just to interject here, I've put the registration for that in the chat. Okay, so everyone is welcome to join us for the live trade. That's a live trade on a live account for non-farm payrolls, and that's tomorrow. Please join me for that. Let's just go back to analysis. So the markets loosen up considerably, And we've got something over here on the dollar. You see it? We'll do this on market scope in a moment. It's going to be easier to do a market scope. See it? You see the topping pattern on the dollar? Okay, so as traders, that's important information. We're about to get a lower trough. We're about to get a lower trough, and you see this big topping pattern on the dollar. Okay. Will it make fighting the job of inflation harder? Yeah, they've loosened up in my opinion, they loosened up conditions. I've always thought that we're going to get sort of a pivot, go deep. And I think the reason we're actually getting a pivot is because we're heading, in my opinion, we're heading towards hard landing. We're heading towards hard landing. So there is a thin line that the Fed's trying to sort of navigate here. The line on the one side, you've got the inflation picture. On the other side, you've got the story of recession. And that's typically what happens when you fight in stagflation. So they were caught in stagflation at the beginning of last year. And there's really a trade-off. And you've got to choose which is the greater evil. And the Fed went with with inflation, which I think was probably the correct call. And then effectively what happened was they got inflation pretty much on the back foot. And we know that because median inflation has rolled over, the sticky stuff starting to roll over. But you want to try and keep conditions as tight as possible until you have to loosen up. And I think yesterday perhaps there was a premature loosening up. We'll just have to watch the data there. By the way, tomorrow is a big day. Today's a big day. We get ECB, we get Bank of England as well. Tomorrow we get non-farm payroll, but then we also get the ISM non-manufacturing, which is in contraction. It's a very important data point. I can't stress it. As traders, we have to keep on top of this recession story. Chris just asking for the non-farm payroll link again. Sure, I'm going to just paste that and send it to all. Chris, just let me know if you've got that. I want to do this head and shoulders analysis on, I want to do it on market scope. All right, so let's just bring up market scope. Chris, you get that link there? All right, let's go through to the, okay, good. All right, so here's, we're on the main layout of market scope 2.0. I've got this as a logarithmic setting. I've got this logarithmic. You can see the downtrend here in the dollar. Low peak, low trough, low peak, low trough. Let's get rid of that. Let's look at this more as a topping pattern. Okay. You see it? Okay, that's what we saw. Okay, we're gonna rework the peaks and troughs here. I'll show you. This is what a head and shoulders pattern is. It's effectively a change in trend on a primary basis. Okay. What we can do here, just by the way, just for academics, just put in the target. By the way, the target's either going to be hit or it's not going to be hit. That's the problem with forecasting, right? Sometimes you hit it and then you want to pat yourself on the back. Most times you don't hit it, and then where I think the measured move comes in is it kind of really just, instead of taking a look at it at the target, it highlights just how bearish we are. So there's certainly downside to come in the US dollar here. And if there's downside, I'm not convinced we hit the target. We might not. I mean, we're talking about a hefty decline there. But as traders, this gives us a huge amount of useful information, Okay, so you see we've got a target here. Let's take out the left shoulder, right shoulder. What did I do here? I'm losing my mind. That's the right shoulder. Okay, I'm begging your pardon. All right, let's just take that out. Okay, what I want to do is bring up Microsoft Paint. I want to show you what a head and shoulders is. It's not something esoteric. It's something that's incredibly useful when we take a look at it in terms of peaks and troughs. Let's take a look at it on Microsoft Paint. All right, this is some work we did the other day. We can take this out. All right, let's put in our head and shoulders top. Watch this very carefully. Okay, watch this very carefully. This is an uptrend. Okay, peak, trough, higher peak, higher trough, higher peak, higher trough. Now, what happens with head and shoulders is there's a trend reversal. Watch this. There's the next impulse. Okay. There's your head and shoulders. Look what's happened. It's a change in trend. Peak. Trough. That's what a head and shoulders is telling us. It's telling you that it's a change in trend. Okay. So now let's go back to the and let's just add in let's put in our references. Here's the reference peak. Okay. Here's the reference trough. Okay. Here's the lower peak. Okay. Here's the lower trough. Now, there's something to be said here in terms of market sentiment. Okay, watch this. Here is the left shoulder. Here's the left shoulder. The left shoulder is quite pronounced. We've got a very pronounced left shoulder. We've got a very short, and it's really muted, the opposite of pronounced. But you know, you can hardly see the right shoulder here. Well, that's because there's no bullish action. That's telling us something. The fact that there's no right shoulder. The left shoulder is telling us that the bulls really were firing on sort of all cylinders. Here, the bulls tried, and we've got just like one little gravestone doji over there where the bulls tried very hard to take price up, failed miserably. That's your lower peak. So the greenback's looking really weak. To the point that the right shoulder is, you've got to really look for it. Okay, take a look at the momentum indicator. The momentum indicator is below 50. Okay, as long as it stays below 50, okay, there is real pressure on greenback. Real pressure on the greenback. You go now down to the lower time frames. Okay, we've just gone back into 3. That's our week. We're still maintaining the lower quintile. All right. And now what we can do is we can start looking at the hourly chart. And there's another, we spotted this yesterday. Anybody that was in the webinar yesterday, here was the hourly, left shoulder, head, right shoulder. We spotted this and we said, this is a topping pattern. We also said that it's very hard to kind of make any inferences because it was a important announcement. But look what happened after the announcement. Really just okay. So this one we got. Okay. And here's the minimum target exceeded. All right. So you can see that the target inferred just how bearish, how weak the dollar is. Now, here is the signal. And how do you analyze this? With great sort of uncertainty is not the word, trepidation, because this swing is well advanced. To get short here, you're getting pretty late into the swing. And that's not really the approach that we have in the webinar. With the webinar, we have very distinct. We wait for the pullback, the correction. Once we get the correction, okay, we're going to try and take it to the downside. Try and take it to the downside. So that's what we're waiting for, trying to see this the downside. Okay, go back here. And we can keep an eye on the central pivot to see if we hit that resistance and take it to the downside. So perhaps something like, and that's really what we're going to do for this morning. We're just going to do the dollar analysis. I'm going to stop because it's the top of the hour. Please join me for the live trade tomorrow. Please email me if you have any more questions. And what we'll do is we'll conclude at this point. Thanks very much, guys. Have a good day ahead, good evening ahead. We shall chat tomorrow. Cheers.